I'd like to share a story about my condo, which is a very, I think, unique case. Just this year, I mean, we have a little bit. We have a building, we're waterfront building, 310 feet on the water. We needed a new seawall. We're taking the opportunity over to redo our pool and dock, as well as some other work that needed to get done to our building. It's a $2 million assessment. A lot of people, they were, I've heard bitching and moaning. Nobody wanted to pay this assessment, of course, right? Um, and, you have a lot of concern, but we passed the assessment a few months ago. Uh, Actually, earlier in the year, nobody listed their apartment for sale. So despite having a very large special assessment for our building, the residents, found a way to get it done. And for those who can't, there is a program with the Miami-Dade County that I'm sure you're maybe familiar with, but they are willing to, with those on fixed incomes and those who qualify even for less than the median income, families that are less than the median income, you can apply for a county loan. It's an interest-free loan that is up to $50,000, which is actually allowing you to pay back your special assessments interest-free over 30 years.
Oh,
So
wow.
I think, yeah, it's a great program that the county has in place that I think more word has to get out about this program, because Miami-Dade County does have something in place to help the residents that, are less than the median income, who want to stay in their buildings, and they can help them take on these special assessments at interest free over 30 years, just like your traditional mortgages.
So Andy, your building's about 87 units, right?
That's right.
All right. So $2 million special assessment, 87 units, rough math, looking about
Yeah.
23 grand.
20,000 for the 1 bedrooms and 30,000 for the 2 bedrooms. I own one of each in our building. I mean, I had $50,000. It's a large nut that has to get paid over the year. Um,
How long did they give you to pay it?
Well, we only did a year. I mean, it was something. However, it's a quick payment. A lot of them are longer, but ours
Yep.
is 12 months. However, it was something that, it was about 2 to 3 years worth of meetings. So our board has been very transparent. We've hosted at least quarterly meetings. We've talked about the work for a while. So anybody who was remotely engaged in our building did know this was coming. Of course, you have those who say that it come out of the blue, but, I think we did a very good, and the majority of people, they at least had the opportunity to prepare and know that, look, this is something we want to do. Largely, it's going to be a great capital improvement into our building. So we're going to have a new dock come back there, brand new pool, and of course a seawall. So I think it will add the value back into the home, but nobody likes parting with cash. I mean, that's an uncomfortable, it's an extra bill, a huge extra expense that you have to pay. And this was a very large one for our building, but in our circumstance, the condo is enduring it. And so far, collections have gone well. People are able to keep. And actually next month we start the construction on our seawall. So
Now, if somebody doesn't pay, what do they face? The association, and you're no longer a part of the board.
I'm no
Uh,
longer a part.
But so the association, in theory, could go after that person and ultimately move
Yeah.
to foreclose.
Yeah, there's a collections program. If you don't pay after, I think you get a notice after 30 days, 60 days, you become delinquent, and then you get moved over to the condo attorneys who, they can go the route of foreclosure if you're not willing, or in many cases, I think, they're still willing to make payment plans or just something, have some agreement that you are acknowledging you owe this money and you're putting a plan in place, that shows that, hey, we want to stay here. We are going to pay it. Can you give us a little bit of longer? And hopefully you have a reasonable condo association who can then work with you. But, I think that's also going to be based on your condo association. Are they flexible enough to work with you, or are they just taking the hard stance of pay or get out?
Now, on your maintenance side, what does your building go for, price per square foot? Because remember, $1.08 is what they had said under 300 units for service
right at-
residential.
We were right at $1 a foot. I got about 1,800 square feet. I'm paying right about 1,800 a month. So we're right about that number now. The reserve, we haven't finished, our reserve study. So It'll be interesting. A lot of it is still TBD of the future. Are we
Yep.
going to have, which is something that I was always expressing when I was part of my board, which is, I ultimately think this assessment that we're doing is a good thing. And this is good work for our building. And it's going to be beautiful when it's going to done. And it's going to add a lot of value. But I was saying, look, let's see what happens with this reserve study, because now if we're forced to do other work with the reserve study, we might have another assessment upon us. I mean, this is still out there. Hopefully, the argument that the other board members were making is, look, we've done everything over the past years. We've been due diligent. We replaced both our elevators are new. Our building was, we had, it was originally built in 1969, but we did all impact windows, everything's been modernized. So they've done, we have done a good job over the years. I think which is why I'm there. I think it's a little gem of a building to be in North Bay Village that has updated itself correctly over the years. But it's still pending this new reserve study by the end of this year, and at the mercy of what an engineer comes into. And if they decide that there's other things that need to be done, then we're going to have to address those too.
So Andy, just running the numbers real quick then. So if you're looking at $1 a foot, you get 1,800 square feet, you're looking at $1,800 a month. You got, let's call it blended 25 grand special assessment. That's another 2 G's. So you're dropping 3,800 a month, which is not tax deductible. Plus if you have debt service and anything else, plus property taxes based on the value, which is 2%, we're talking what, 7, 8, 10 grand a month.
It's an expensive year. It was an expensive year to remain there. We have, however, seen great appreciation over the past couple of years, is the argument.
Okay.
The appreciation that you made over the past couple of years sitting in the pandemic, in many cases, I think my condos maybe have doubled from the time I purchased in just 2018.
Well done.
So, so how, you gotta factor that in too. It can't all be wins. You're gonna have to take some of the good with the bad.
So
Ultimately,
somebody out listening to this podcast, give them the proposition as to why they would move today and buy something, or why they wouldn't listen to Vicky Lopez, the representative, who says don't buy till 2026. Once everything kind of gets washed out. I mean, is there any reason to pull the trigger today rather than listen to Vicky Lopez? Is it the fact that everyone's going to be coming in at 2026 and you're going to miss it?
Yeah, I think that's a lot of it. I mean, it's kind of like, what's that Warren Buffett quote where, like, when others are greedy, be fearful. And when others are fearful, be greedy. So I think a lot of people are fearful now that, costs are going to get too high. What's happening? But because of that, I think there's less buyers in the pool, and I'm seeing a lot of sellers that are concerned too. And in certain circumstances where you're having these high special assessments, I'm seeing buyers be able to negotiate great deals for themselves. Like, yeah, I'll come in, but the special assessment is going to be paid off at close. Yep. And I'm going to come in and buy it at market rate with you paying the special assessment. And, my advice for these people that are possibly interested in Miami is work with a good realtor. Work with somebody who can negotiate favorable terms for you, because, I think ultimately there are still great buying opportunities out there. You just have to do your research. You have to look at the reserve studies. You have to have an idea of what's possibly coming in the future and what, so factor that all in. But, I ultimately think Miami is a city of the future. I mean, we have so many companies that are moving here. We have Citadel, we have Amazon, we have Apple. I mean, everything else, I still see us outpacing other markets. New York is still moving to Florida, California, they're relocating here. So I think we're still seeing more relocation than any place in the United States. Of course, we have the interest from South American demand, European demand. We have the favorable tax law. So I think another big thing that happened in the pandemic is Florida has, with all the past cycles, we've always been a second home market, right? I mean, this has always been a vacation place, a place where people are on, buying maybe their second or vacation home, maybe a rental property. But since the pandemic, when you're able to work from home, I think we're seeing a lot more primary residents come into Florida and say, why am I going to pay 10% to the state of New York or 10% to the state of California when I'm working from my home, when I can be working, in Miami, saving that money? It just, so I think that relocated, so a lot of the people that are here now, that moved here over the past 5 years, they're primary residents. This isn't a second home market anymore. This is a much more annual market. And I think we're seeing that now. And I think that's going to help us sustain any of the past cycles that Florida has seen.
This special report examining the repercussions of Florida's 2025 Condo Association Financial Cliff is a podcast series brought to you by the Miami Condo Market Investing Club trademark. Founded by Miami condo consultant and expert witness Peter Zalewski in 2024, the objective of the club is to build a community to share real-time, actionable information on the latest real estate trends and opportunities in the Tri-County South Florida region of Miami-Dade, Broward, and Palm Beach. The club is ideally suited for do-it-yourself DIY condo buyers who can rely on our latest statistics, expert opinions, and access to consulting services. Club members are exclusively invited to attend virtual monthly meetings at noon on the second Wednesday of every month. The club also offers regular meetup events in person for members to network and talk shop with real estate investors, professional service providers, and suppliers. To find out more, please visit peterzalewski.substack.com. Additionally, we encourage you to listen or view our Miami Real Estate Investing podcast wherever you get podcasts. The podcast is available on Apple, Spotify, and/or YouTube.